Getting to the property market now. So renting while investing in another property. Anthony Landahl from Equilibria Finance here to break down the latest rent vesting trends and how it affects young buyers or not so young people, Anthony. What are we seeing?
Yeah, we're seeing this concept of rent vesting becoming a lot more mainstream and strategic. It came about effectively where there was a swathe of young people who couldn't afford to buy their first home buying an investment, but it's now becoming a much more strategic overlay where a lot of young professionals, portion of first home buyers are going, look, the area we want to live, the mortgage repayments are a lot higher than the rent. Let's strategically keep living there, it suits our lifestyle, and go and look at deploying our capital into an investment strategy, into investment property where we might get a higher rental yield. So it's becoming a lot more mainstream. There's talks of banks designing some mortgage products around this idea of rent vesting, and it's being reflected in some of our ABS data that we're seeing as well, where investor credit flows are up around 7%, and we are having a lot more conversations with first home buyers or young professionals taking that path.
I think what's really interesting is that even in the last 12 months or so, the discussion around this has turned more favourable, and when you talk about the banks maybe setting up mortgages to be like this, because you know this happens in many other countries in the world. It seems to be mainly in Australia where people think it's almost a right to have to own the property they live in.
Yeah, I think historically in Australia, home ownership's been a big thing, and I guess that is one of the sacrifices of this strategy, or one of the considerations is probably a better way of putting it, is young buyers who might be a first home buyer lose those first home buyer benefits. Purchasing a home might have some challenges in the first couple of years, but you are paying a home down, creating equity, having a primary residence. But it is a much more popular strategy that's coming about, particularly with, I guess, the challenges of home ownership now and affordability around that. People are deploying capital elsewhere.
So I think you maybe touched on a couple, but talk about the potential upside and downsides.
Yeah, potential upside obviously is you live in an area you want to live where you can't afford those mortgage repayments. The other potential upside is you're putting your capital into a wealth accumulation strategy that might deploy capital, and you might be able to leverage into other investment properties. So you're starting to build a portfolio of properties that may one day lead to being able to purchase in a certain area as well. I guess one of the downsides is you haven't purchased a first home, and you've got to be very strategic about this. This strategy may not work, for example, in a regional area where rental yields are a lot higher. It might in fact be cheaper to purchase a home than to rent a home. So it very much is around the area you want to live, the disparity in those areas between the cost of mortgage repayments and rent, and also your appetite to deploy your capital into an investment strategy. But yeah, there's some absolute considerations around it, but it is becoming more important.
What are some of the key factors if someone's successful at this strategy?
Yeah, one of the most important factors is getting some strategy around the investment purchase. It's gone from being, look, I can't afford a property to live in this area, I'll buy somewhere else. But one of the key strategies is actually looking at it as an investment purchase, wealth accumulation strategy, finding the right property, getting the rental yields, designing the finance around the cash flow, potentially having interest-only payments so surplus cash can be looked at the next investment property. So really viewing it now as an investment strategy rather than just can't afford to live here, let's buy a property somewhere. Building that strategic overlay into it helps that strategy become successful.
And I just wanted to ask you about the government changes to the first home buyers scheme, which is making it more accessible for people to get into the property market. What do you think that's going to do to property prices come October?
Yeah, as you say, it lowers barriers to entry effectively for first home buyers, and there's a lot more talk about first home buyers getting into the market. Look, in simple terms, it will stimulate demand. We are going to get more first home buyers with bigger budgets being able to look at purchasing properties in areas maybe they want to live, and I think it is going to stimulate more activity. We've still got the challenge of limited supply, so look, I think it will stimulate the market and probably keep pushing prices up. and we've seen the last two quarters, we've had pretty strong growth in the housing market. The last quarter was 1.8%. That's been the strongest since 2024, second quarter. So we are seeing some growth in the market, and I think the first home guarantee scheme will increase that growth.